Hello, this is Ask Slim Live, trade planning with Slim's analyst team. It's July 3rd, 2025. We have Matt, Arvi, and Katie today. Let's take a look at the upcoming Ask Slim Market Week and live events schedule. Today, as I said, July 3rd, we have a trade planning live session with the analyst team. Next week, Friday the 11th, we will have Slim's typical recorded Market Week show. And then on the 18th, we'll do a Market Week live event that will be with Slim and the team. And then we'll finish up July with a recorded Market Week. If you're a member, you can always check out the events calendar right on your dashboard where it will show the upcoming content and events schedule. All right, so all of the information that we provide on any of our platforms, including website, YouTube, social media, Discord, is all for informational, educational purposes only and should not be construed as investment or trading advice. Your host for today, we have myself, I'm Matt, we have Arvi, we have Katie. We are the proteges of Slim's, and together we bring about 50 years of combined experience as market participants and technical analysts. So with Slim, that pushes us above 100 years of total experience. So we love what we do, and we're always excited to bring it to you. If you want to learn more about us, you can go to askslim.com, and you can go to Meet the Team, which is in the menu, and you can see some additional information, including some interviews that we've done with Slim and with each other. All right, today's agenda for our live trade planning event, we are going to do the member Q&A. So this is your opportunity to ask us to review symbols, and we'll step through our trade planning process with the Ask Slim methodology. So we use the methodology to demonstrate how we apply cycle analysis, momentum studies, fib swing high, swing low techniques. So that helps us to generate the fundamental technical evidence that you can then use for your trade planning purposes. So go ahead and start putting those symbols into the chat or the Q&A, and that will get those queued up for us. After we finish that segment, we're going to move into the level 3 special. That is our new special for the next few weeks. We have a really exciting offer that is available. So for those of you that might be new to Ask Slim, or for those of you that are currently not a level 3 or higher member, this would be a great chance for you to learn more and also take full advantage of that opportunity. All right, and then we'll finish off today's trade planning live session with an option strategy selection segment where I'm going to go through some technical analysis, short-term outlook for IWM, and then Katie's going to illustrate how to leverage those technical insights when selecting option strategies. So this should be a very insightful show, a lot of great information when it comes to learning about what we do here at Ask Slim. And we are excited to have you be participants at this event. All right, let's get it started. Again, we're going to look at some chart requests that came in, symbols from our members. Katie, RV, what do we have so far coming in?
Just Altria, and then we had a couple that were requested yesterday from one of our members.
Okay.
XLY and Amazon.
All right, well, go ahead and you can start.
Do you want me to start, Arvi?
Yeah, sure, Katie, because I have to do a little bit of work on the charts first. So yeah,
Okay,
go ahead.
sounds good. All right, let me quickly share my screen. So the member that requested some charts yesterday specifically requested long-term charts and intermediate charts. So that's the monthly and the weekly. And we're going to start with the monthly chart of Amazon. So here we have a large dominant 50 bar cycle that's broken into harmonic families of minor half cycles. And here was the low that formed just about 3 months ago, right in line with this minor cycle trough. So I've talked about this symbol in a couple of the long-term analysis videos that I've done. And the target price for this move up was about 225, and we are almost there now. However, notice that we have this nice upturn again in momentum in the rising phase of this second minor half cycle. And based on that, and we're going to look in a moment at the weekly chart, I would be inclined to raise this projection up so that we have the possibility of revisiting this high at 242.5. We don't have a dominant trough due out until, let's see, this is December of 2026 into the beginning of 2027. So quite a long time to go. So I would anticipate that barring any unforeseen events, we should be able to revisit that high. Let's take a look at the weekly chart, and we can sort of zoom in to why I believe that. So the reason that I had initially targeted the 225 level is because that is the weekly 78.6% fib of the move from that high down to the recent low. Now this low back here in April retraced quite deeply, so the probabilities then favor not being able to take out the prior cycle high. However, we do have very strong momentum. I want to see how Amazon behaves right around this 78.6% fib. Can it get above it and hold? And if it does, then we would have the ability to retest that recent high, as I said. If it stalls or fails from here, then I would suspect that we will continue lower into this weekly cycle time period from late October through the beginning of December of this year. And we wasn't requested, but I'll just take a look quickly at the daily chart. So you can see we've taken out this prior cycle high and now moving up on strong momentum in all of these time frames. So we do have an opportunity to see a retest of this recent high. And the other symbol that was requested was XLY. Let me switch to one that's a little bit more simple. This is the long-term chart of XLY, consumer discretionary ETF, of which Amazon and Tesla are the largest members. This is a 32-bar monthly cycle. You can see that we are inside this monthly cycle timing window, which is this period of time denoted by these vertical blue dash lines. Again, just 3 months off this low, and we still do have negative momentum, but as we continue to trade higher and move above this reversal scout, then we would likely see this turn up. So here's our long-term 78.6% fib of the move from that high to this recent low, and that's sitting at 225.90. The old high is 240.28, and then we have some levels above here. Since this is very early in the rising phase and we're likely about to switch to positive momentum, I have this area here targeted, and that would be the initial target, 243.73 up to 262.92. And over on the weekly chart, you can see that we made this low. It looks very much like the Amazon chart. We retraced deeply and now approaching that 78.6% fib. It'll be very important to see if we can get above that and hold. If this forms something like a basing cycle, then perhaps we have to wait to retest and take out that high out until the beginning of next year. However, we do have positive momentum in this time frame as well. So I would anticipate that we would eventually be able to see these levels. RV, are you ready to take over?
Yes, I am. And there was also one on TSLA. Why don't
Oh,
you
Tesla?
also do that
Okay,
one while
sure.
you
Let me
have it
do
there?
that quick. Yep. Tesla is here. Let me just pull up the weekly chart of Tesla. So you can see that this is showing a little bit of weakness. We did retrace deeply all the way back down to this prior cycle low support. So again, when that happens, the probabilities favor that we will not be able to take out the cycle high. And you can see that we have kind of stalled in this resistance zone that was created. And now we have the reversal scout having switched over to negative momentum. So we don't have a cycle timing window due until, let's say, beginning of October through the beginning of November. So I would anticipate that this kind of just chops around in here a bit. Over on the daily chart, you can see what has happened. We had this retracement down to the 78.6% fib, and based on that, this resistance zone was created, and now we are getting up into that. So what I would want to see here is for us to get a failure from that area. So when you start to see, let's just take a look quickly at the 2-hour chart, you can see the reversal scout is turning up. The slim ribbon is still negative. When this goes back to a negative reversal scout, or we get a signal on the slim ribbon PO here, which is momentum to the downside continuation signal, then that might be a good shorting opportunity into this area. It is around earnings, but it runs from 717 to 725. So this is a possible short. And then we would have to see if it does end up configuring negatively, then which means it would take out this low here, then I would suspect that we have seen the high of this cycle and it would be lower into this time period out in the winter. All right,
All right.
RV, that's all.
Awesome. Thanks, Katie. Let's go ahead and pop over to look at Altria. Give me one second. All right, you should see Altria. So what we're seeing here on the intermediate term is really very nice. We formed our low back here, have seen only a series of higher cycle highs, higher cycle lows, acting beautifully, and we're still holding in okay. So what we'll be watching for is, let me get my cursor back to my shortcut here. We'll be looking for this to curl its way back to the upside and then move up into this zone here from right around 61.32 up to around 63.63. Pop over to the short term. There's a low that is due right around now. We'll be looking for this to actually move through this line here, which is right around 60.40. If it can do so, we would look for a move through that old high at 61.26, and then we would draw in our levels from cycle low, cycle high to cycle low. And if this is the low, which we have to just really wait and see. Let's clear that 78.6 off there. You can see there's a zone up here from around 61.80 to around 62.86. So only a move through this first line here, then this old swing high there would set up a move into this zone right here, which is 61.80 up to around 62.86. So if we go ahead and hop over to the short term here, we'll see what's happening there. And you can see we have now turned up, and we'll be looking for this to, again, form that series of higher highs and higher lows and work its way in time back to the old high, only if it loses this low at, let's see where that is, at 58 or so. Would that say that this is not in a positive state in the short term? Okay, so that's our look there at MO. I'm going to hand this back off to you, Matt.
All right. I appreciate that. I just wanted to touch on, Katie, the new longer term monthly analysis service that we've recently launched that will be expanding. I'm just going to show that page really quick because I know there's a lot of interest in that, and wanted you just to maybe just talk about your frequency that you're doing this now and what that might what that looks like. And also for level 4 members, they can access directly these charts, but Katie does post the static charts, screenshots of the analysis that she does. So I'll just pull this up as a quick little backdrop so that you can just chat about that for a second.
Sure. The latest one that I did was in the middle of June, and it a number of symbols that have deteriorating patterns in the long term. And so the frequency of these long-term analysis videos is currently twice a month. Usually in the mid-month, I'll do a video on symbols that are showing interesting patterns, either positive or negative, in the long term. And then at the beginning of the month, after we have completed a new candle, then I will do a follow-up video. So next week, I'm going to be doing a follow-up video on these 6 symbols to see if they are improving now or if they are still showing deterioration in the long-term time frame. And so again, the frequency is a fresh video approximately mid-month with symbols of interest in this time frame, and then a follow-up video at the beginning of the subsequent month.
Okay, excellent. Appreciate that. All right, so we're going to move on from that segment. There might be a couple more symbols that come in. We'll see if we have time to cover those as we finish up. But what's next is I'm just going to do a review of the Ask Slim services. For those of you that are new to Ask Slim, it's important that we share who we are and what we do. You should see the homepage of Ask Slim. Just give me a thumbs up if you can. Okay, great. So at Ask Slim, we provide technical analysis, services, content, and then trade planning tools. We have 4 core membership levels. So I'm going to jump over and show what that looks like. So they range from level 1, level 2, level 3, and level 4. And how this works is that as you go higher in our membership levels, you have an increase in the amount of coverage that we offer. So for example, in level 1, it is a deep dive into the indexes and into the ETFs, a select spider ETFs. There's a handful of those that we cover, and then we take a deep dive into the indexes on a daily basis with a daily snapshot report. And then as you move into level 2, that gives you access to our charts hub. So all 84 of our symbols are covered in the charts hub. All of the videos, the standard videos that we do are available in level 2, and then level 3 and level 4 start to bring you access to our trade planning tools, and then level 4 is direct access to our charts. In addition to that, we have a standalone add-on, which is a day trader service for intraday swing traders. So that is a very comprehensive service for day traders who are not scalpers, but someone who's looking at maybe a 15-minute to upwards of even an hour, hour and a half type of setup. That's what the tools are designed for. So what I did want to cover then for just a couple more minutes is our level 3 special offer. So level 3 special offer is 50% off. As it says here, you get 1 month off of level 3. It's 50% off, $59.50. Regular is $119. Now I'm just going to pull up this slide here. And this is available for first-time subscribers and those of you that might want to upgrade. And you really do have an opportunity to support your trade planning process with level 3 because it's going to give you access to data that you really need. And that's how do you make directional bias decisions. That's number 1 when you're setting up your trade planning. That is most important is determining what's your bias. Am I looking to be long? Am I looking to be short? And when you have the right technical analysis, then it's a lot easier to make that decision. Then beyond that, with cycle analysis, it really helps to give you a sense of the maturity of the move, right? So you have very important timing insights from key lows to is something in a peaking phase, something in a declining phase. So as those opportunities present themselves at various phases, you can apply that through our work into your own trade planning process. And then obviously you got to have key levels, right? So support, resistance, projection zones, so on and so forth. Key inflection points, we point those out and make it very clear how that's impacting the overall directional bias as well. And then with the team, you're going to learn about pattern recognition and the importance of pattern translations through cycle analysis. And then finally, with our momentum studies, whether you're a near-term trader, so if you only trade, let's say 1 to 5 sessions, or the next 1 to 5 sessions, about less than a week, we have a momentum conditions monitor. It's our market conditions monitor, which I'm going to show here in just a second. They can help you with that. Same with short-term and intermediate. So I'm just going to pull up some examples of these tools very quickly. Next week, I'll host an extended live event so that we can review all of these tools in a deeper take on it. So first I want to start with sort of a top-down approach. So we have what's called a futures hub. And basically what we want to do is at a glance, at a high level, for that intermediate time frame outlook, you can see the condition very quickly of major markets. So right now, and this is based on our the cycle analysis, the translations and phasing that we're seeing in those markets. Obviously green means it's a positive condition. Yellow is going to mean that there's a conflict going on between the technical indicators, so more of a neutral condition. And then obviously red is going to be that there's a more negative condition happening in there. When you click on one of the particular symbols, that's going to take you to a technical overview where you can look at the charts. So you got the static chart, and then you also can see the weekly, the daily, the video analysis. So whenever there was some recent technical analysis done on a specific symbol in our Future Speak video, you can pull that up and it takes you directly to the clip that was done on that symbol. So this is a very, very handy way to get a top-down look at what's happening very quickly. And then from there, you can jump and you can go to other services to figure out that directional bias that I was talking about. So this is one of those tools, which is our ranking system for those of you that look at, let's say, swing trades in a 3 to 6 week outlook. This is another very, very helpful tool where you can go right to our directional bias column here, and you can sort by the directional bias. And then you can also go and look at the weekly or daily chart specifically for that symbol. We have a ton of resources that go over how to read all of these various tools. We do live events, and we have our Discord channel to help. But we really try, again, to focus on the key aspects of the trade planning process when it comes to outlook period. You got to know how long you're looking to hold your position, or what, when you're looking at charts and you boil down that analysis and you come up with a price objective, price projection, you should have some sense of how long that outlook should be. And with cycle analysis, you have a really good framework to be able to do that with. And then you can also, with the ranking system, we have a cycle data only a view here where you're able to see the weekly and the daily cycle timing in terms of the cycle low timing windows that are for those particular symbols, and then the weekly cycle counts, the daily cycle counts. And what that simply means is when you go to the charts that we have, and we talk about cycle low timing windows, that's the period of risk where a low is due. So you can see these windows here and here on the daily chart where there was lows due, where those lows form. That's what we're trying to measure with cycle analysis, try to understand, when these lows can form. And then depending on the bias of that overall symbol, that'll help give you a sense of what's that next rising phase going to look like. Are we likely to make new highs, test highs? Are we likely to fail in resistance and roll over? So that's what we help put that whole puzzle together. And we try to organize our charts to give you that information as clearly as possible. Yes, it does take some time to understand it, assimilate it. But once you do, you really have the ability to have a lot more information at your disposal when you're doing your trade planning. So you have access to those daily, weekly charts. That's what this is set up here to give you a sense of the weekly counts, daily counts. I know there's a number of you like to set up your own cycle analysis on your chart, so this can help with that because this will give you the exact counts that we're using. So that's available on our ranking system. We have a cycle low timing tracker, which Katie manages. This is an incredibly helpful tool for those of you that are trying to reduce your risk, to understand when these lows are likely to happen, and then also to take full advantage of when these lows do take place. So I'm just going to click on a symbol here, and we try to color code what we have as well to give you, again, at a glance, look at something positive or negative or neutral. So here on the daily chart condition of AMD is positive. I'm going to go to that chart right now. It's in a period of risk. You can see here, right? We're starting to get this little pullback. But as I said earlier, you learn about structures and translations. And when you do, that can help you understand the likelihood of the next move in that next cycle. So if we go back through, and AMD is a really good case of this, where when Katie talked about configuration before, does the low occur higher or lower than the prior low? You can see here that we had a low, and then the next low set up higher than the prior low. That tells you that something's changing, right? There's likely a base that was forming here off of this negative downtrend that we had previously. We had a higher low, then we rally, and this made a peak right on schedule, right in the middle of the cycle. It made a peak, it pulled back, and then our pullback happened around probably the 38.2 to 50% retracement area. That configuration was positive. That helps tell you that in that next cycle, there's a higher probability of a retest or breakout of that high. That's exactly what we had here. And then we had a very, very powerful right-hand translation that occurred, and really haven't even, and this is an extreme right-hand translation. It's now finally starting to get a little pullback. So we'll see where this settles in, but that would suggest that in the next cycle, and especially in the intermediate time frame, there's a very high probability at this point, unless we were to do some serious technical damage, that AMD would likely continue higher. So Katie's going to track this. She does this on the cyclo timing tracker on a daily basis. She will put out on Discord an update, and then she changes our timing tracker, and you'll see the symbol move from the pure period of risk to the bottom pending, then to bottom confirmed. Now, as it stays in this period of risk, you might see it also appear, AMD might appear in all three of these phases until it moves out of that cyclo timing window. But it really does help you get a sense of, again, what's that dominant condition? What's the potential new opportunity coming in the next cycle? It gives you some risk anchor points to work with, so that you can look at when things move into these bottom pendings, bottom confirmed. You can use those key lows as markers for your risk management. That's another great way to utilize our information. So again, there's a very comprehensive framework that you can utilize with Ask Slim. And then the momentum indicator that we have on the bottom here, that is a custom indicator that we created called the Slim Ribbon PO. You can see how what this does is it's measuring the momentum condition. So when it's green, it's positive. And when there is this little green arrow or a red arrow, but in this case here, a green arrow, that would suggest that there was a pullback that came into the oversold level. And so this is one of those indicators, is not a lagging indicator. Because a lot of people ask, well, do you have anything that's more of a leading indicator? Well, this is definitely designed to be one of those, in that it's capturing a dominant momentum trend or condition. And then as there's a pullback, they're into a oversold condition. And if it doesn't break the alignment of the dominant condition, then they'll show a continuation signal. So this was a very powerful continuation signals, and especially in trending conditions, it's very helpful. So there's so much in level 3. I only wanted to keep this brief. And there's trade ideas that we have that RV puts together on a daily basis. There's several of them a week, and it's not just, he doesn't just put it out there and sort of leave it. There's a great deal of information that he shares on each one. It's a really good structure so that you can learn about how we apply our methodology in real time. And then also there is our Discord channel, which I'm just going to pull over, and I'll wrap it up with that for now. We're on the Discord channel. RV has a trade ideas feed, and it's like his blog, his technical analysis blog, where he's constantly sharing just fantastic insights into technical conditions, symbols that he's watching, he's trading, sectors that he's watching, the logic behind why. I mean, that's so important. And then you also have an opportunity to have some Q&A back and forth with RV on there. And each one of us analysts are on here. Katie has her channels for the cycle low timing tracker. You can reach out to her regarding the long-term analysis as well. So you really have a combination of the information that you can learn from, ways of seeing how we apply it, and then also that interaction with the analyst team. So level 3 for $59.50 for a month to test it out. You're going to get a heck of a lot more than that cost in terms of overall value. And if you have any questions, you can reach out to me at matt@askslim.com. All right, so that wraps that up. We're going to move on into the next segment here. Our next segment is going to be covering translating technical analysis into option strategy selection. So Katie's going to demonstrate how you leverage technical analysis for option strategy selection. So I'm going to kick it off with a review of IWM. And then Katie, based on that information, is going to put together some option strategies. Now, we typically do this together a day or two before. And what has been a recurring pattern here with IWM is that it really makes the move before we can announce our overall review of it. And so we have a bullish overall bias on IWM in the short term. And I'm going to explain that right now. And then Katie will bring us some option strategy selections. So first, though, even though this is a short-term outlook, I want to talk about the intermediate chart here, the weekly chart, because really this is what you want to do is figure out through the higher level, more dominant, whether conditions and chart time frames, where those larger waves are they bullish or are they bearish? Are they neutral? You know, what's happening in that bigger picture? And you can see here that this is when we made that sort of panic low that we had based on all the tariff geopolitical back and forths that kicked off the tariff discussions. And we made that low, and then the reversal scout. So I'm looking at the reversal scout, which is this purple and green indicator that we use. It's a momentum trend indicator, and that turned positive, and it's been positive since. So throughout this cycle, so this first, I added in a minor cycle. It just helps to give me some context, because I wanted to see what's the pattern structure right now relative to where we were and where we are compared to the prior cycles. So in this minor cycle here, if I do a quick draw, because again, I'm trying to understand bias, right? That first step in our process when we're looking for our trade planning process is once we define our outlook period. So we're talking about a short-term outlook. Once I have that, then I'm going to go to how do I assess the directional bias? So that's what I'm doing with you right now, is assessing this directional bias, because we believe in the power of the money flow pattern, the trend, the momentum. And if you have that, you have a higher probability of likely having a profitable trade or at least reducing your risk, because time and price is on your side. As you can tell here, as we've gone in time, right? And then in price, the price has risen here. Okay, so we have a couple different draws I'm going to do very quickly. So off this major or dominant primary cycle peak that came off of this primary cycle that we had there, and then also off of the minor cycle, it gives me some key levels to look at. And so this week is in particular very, very important, because two things have happened. On the major cycle, so this where we had the major peak and then we had our trough, we're getting a weekly close above the major 61.8. That's a big deal. So that means the bulls are staking a claim that, yeah, we believe in this move, and right now you're going to have to do a lot to take that away. So this is an important, if we close, which it looks like, unless something drastic happens in the next 3 hours, we'll have a close above the major 61.8. And then we're also going to have a close above the intermediate 78.6. So what that says is that both of these patterns now, so this negative pattern structure that we had in the dominant has now shifted to neutral. And then this minor cycle, which was negative, has now shifted to positive. So you have a warning positive happening there. That keeps the door open to further higher prices. Okay, so now that I have that in mind, I move over to the daily chart, and this is really where that analysis and then the projections are going to live. And so Slim brought back in the MDY 54 bar cycle, and then also we have the smaller cycles on here, and I added some minor cycles again, just to give me some additional context. The bottom line is you can see that based on these swing lows, this has been carving out a very positive pattern. And today, this week, it's a confirmation of what has been building up. Now, when it comes to where are we now, we're in a new rising phase on this MDY, if we're using this MDY cycle, we are extended. However, this doesn't mean that doesn't mean we look to go short, or doesn't mean it's a negative overall condition. What it says is that there's a likelihood of a continuation happening to the upside. The projection zones, today we're actually already testing one of them. So that one ran to about 225, and then the next one's from about, let's just round up, 229, then to 231. And then there's a major fib zone around from about 235 to 238, and that's where that cycle peak breakout is. So overall, this is positive. What would suggest that something's changing in terms of the overall projection zones would be if we close below that third band of the slim ribbon. So that's it's a dynamic indicator that's going to obviously change as price changes. But if you watch that blue, that third band of the blue the color here, which is our 21 EMA, so it's made up of an 8 period exponential average, a 13, and then the 21. If we get a close below there, that would be a warning of a potential minor peak, or even a more dominant peak. But right now we're not close to that. So this would be our support zones. I gave Katie some additional levels to take a look at. Katie, now those have shifted a little bit with today's price action. So that support zone, Katie, would run more from about 216, let's say, to 213. So that would be an important support zone. And then if we violated, I would say the first warning area for the managing your position would be below yesterday's low. So that would be around 217, let's say 217. If we got below there, that would be a warning for managing the position. So as you're putting that together, Katie, maybe we can look at what are the loss, what's the risk if we got below there, and then also what does it look like if we were to get below around that 213.5 point at this time. And then also the targets, we can still look at about that 225 if it just got stuck there and traded in a range. And then also if it broke out and got up to about 230 over the next 2 to 3 weeks.
All right. Would you like me to take the screen?
Yes, I'm going to stop sharing.
Okay. And let's go over to Tasty Trade. All right. Can you see Tasty Trade?
Yep, got it.
Great. So I have IWM loaded in here, and the first thing that I always look at is the IV rank. You can see it's low at 14.9. So we're going to look at a couple of different strategies. Matt requested the put spread, put credit spread, and then a call debit spread, and then a stock replacement strategy. So let's start with the put credit spread, and let's just use this monthly expiration here. I will show a little bit further out in time how that can affect us, both good and bad. Let's start right at the money. And for those who don't know, a put credit spread is the sale of an out of the money put, and then the purchase of a further out of the money put to define our risk and reduce our cost basis. So this is what it looks like. This uses about $734 in capital in my account. Yours might be different. And we collect a credit of $265. So this is a $10 widespread. You're collecting $265. That's okay. I'd prefer to collect a little bit more, but we're only 15 days out. So that would be why if we went to the further dated expiration cycle, which gave us 22 days, you'd collect a little bit more, but not significantly so. Just another 20 bucks. So now let's take a look at the risk graph here. Pull this over. And you can see that you have no risk whatsoever to the upside. And this particular strategy does give you some downside room. Now, it does not hit the levels that Matt was talking about, that 216 to 218 area, but we do have a little bit of room down to, you would take your short call and subtract your credit collected, and that would be your break-even point on the downside. Now, I want to call attention to this orange line because this gives us an opportunity to talk about something that affects option strategies, and that will be theta decay. This is a strategy that requires theta decay. To collect this entire $265 credit, you would need to pass through the entire expiration cycle. So Matt has a couple of price targets in here. 225 was the first one, and then 228 to 230, let's say. This orange line would show if suddenly, while we're talking here, the market's going to close in 17 minutes because it's an early trading day. If suddenly, as we were talking, this bounced up, then we would only make $7. You can see that where it says P&L theoretical as opposed to P&L expiration. So we would only make a couple of dollars if that happened today. If we made it up to 228 today before we closed, we would get about $85. Now, one of the cool things about Tasty Trade is you can go over here to this analysis tab and just click forward and watch the orange line on my screen here as I move this forward in time. So now we're out to Tuesday of next week. 225 gives us about a $50 profit. 228 to 229 gives us anywhere from about 140 to, let's say, 160, somewhere in there. Of course, this is dependent upon all other options metrics such as Vega and things like that remaining static, which that doesn't happen, but this still gives you a generally good idea of what your profit potential could be. And so as you click forward towards expiration, you'll see that that line gets closer and closer to the ideal, which would be max profit at expiration. Let's click it back to today. So that is one of the benefits of the short put spread is that it does give you a little bit of room to the downside, which is going to be different than the next two strategies that we look at. But again, this is something that requires good timing as far as being able to take the profits correctly.
Now, Katie,
So,
if I just jump in just for a
sure.
very quick second, let's see if I can share my screen at the same time, and I'll be off in 30 seconds. But I just wanted, you talked about, you showed a really interesting, that graph, as you move forward in time. And with cycle analysis, what's helpful is if you understand translations. Now, again, there's never any certainties. There's only odds that we can work with. But if you look at the current phasing of IWM relative to its cycles, and if it stays in a bullish overall translation, as we move in time and we get into the late peaking phase, that runs somewhere, Katie, around 714, 715. So at that time, are we about 70% of capturing the premium, or what would it be around that time? I'm just trying to see how you can also try to play time if you're an option trader with cycles. I know that a lot of people try to understand how to do that, and that's why it's important to understand your bias, because if it is going to be a bullishly configured or translating, or if you understand its bias, then there's a higher probability that you see at least it making its peak more towards the right side of the cycle, which can help with timing.
Yes, so that would be with 3 days left to expiration if we were at July 15th. So we'd have 3 days left to expiration. And if you were still hovering around 225, again, max profit was 273, 27, depending on where you get filled at, of course. The profit and loss theoretical would be around 170. Of course, the higher you go, the delta effect of the move will overweigh all of the theta that is holding you back in advance of expiration. So as you can see, if you're way up here at like 234, just a monster move, then you're going to be very close to max profit, and that would be the case even if you had a monster move. You can see even just today that the delta effect overweighs the amount of theta that's left in here. As this becomes more and more out of the money, there's less and less theta in it.
Okay.
All right, let's move on to the call debit spread. Let me go back to the table view, and I'm still, just to keep things kind of equal, I'm just going to set up a $10 wide similar to the put spread. And I'm just going to throw one in here. It's the purchase of an in the money call and then the sale of an out of the money call to reduce the cost basis. So there's a $10 wide call debit spread. Now, what we're going to do is move our strikes so that this area right here, max profit, max loss, is approximately 1-to-1. So I'm going to move this down, and we're getting closer. That could be it, somewhere right around in here, 218, 228 approximately, or 219, 229.
That's a
So
nice little feature, Katie, where you can just click
yeah, you can
on
just move
that.
these strikes back and forth as you desire.
Mhm.
All right, so this one is going to require that we pay a debit of $5.28-29, depending on where you get filled here. And that will be your max loss. Your max profit would be the distance between the width of your strikes and the debit that you paid. So in this case, it says 471. If we take a look at the risk graph, you will see here is where we're trading right now. You don't have, unlike the put spread, you don't have any cushion to the downside. You need that upside move. And again, look at this orange line. This is showing you the effect of theta. So again, if we had our move up to 225 in the next 12 minutes, we'd make 40 bucks. Up to 228, we'd make 144. And if I bring this over and we just move forward in time, watch that orange line, and you can see how that theta effect becomes minimized as you get closer and closer to expiration. And so again, this does not have the downside cushion that I mentioned earlier, and that Matt has identified these kind of zones where you would be rethinking. However, the same disadvantage that theta is playing to your profit, it's also protecting you on the downside. So there's always kind of this give and take. So let's say that we move down to 220, you aren't showing max loss. The same thing, even if you moved down to 216, if it was today, your max loss would be 529. As we said, that was the debit paid, but you would only have about a $200 loss. That theta is protecting you to the downside, even as it is kind of a disadvantage on the upside. And then if you don't have any comments about this one, Matt, I'll show the stock replacement
The only
strategy.
comment I would make is that with this debit spread is that with something that is as strong as this one, where the likelihood of it being a peak right now is lower. If you got a pullback, let's say into the 2-hour slim ribbon or even the top of the daily slim ribbon, and you are a little bit more sophisticated option trader, you could use that opportunity to take some of that hedge off, and then you would have the call left that you could utilize. You have to manage it closer because you take your hedge off, but it is a way to take advantage of not knowing right now if there's gonna be a pause, and take advantage of that little pullback, and then be able to release the hedge and then take advantage of the continuation. So that was the comment I wanted to make.
Yeah, and also if you were to get a little bit of a pullback, that would also be if you just wanted to stick with a pure debit spread, if you're not that sophisticated of a trader and you just wanted to dabble in something, again, you don't have to do this $10 wide. I'm just using it so that we're comparing kind of apples and apples. But
Sure.
if you just wanted to do a couple dollars wide just to try it out, you could also use a pullback as a good entry spot, and you would be just right around the money. So if we pulled back to 220 and you were under the impression that that was going to set you up for another attempt at the upside, then you could do this same kind of thing, but centered around the 220 mark instead of,
Mm-hmm.
just right around where we are right now.
Yep.
All right, let's look then at the last one is going to be the stock replacement strategy. It's called a zebra, and it stands for zero extrinsic back ratio, which sounds complicated, but all it means is that you are trying to eliminate the extrinsic value in the strategy. And that, as you're going to see, is going to help eliminate some of the issues that we were just talking about. So I'm just looking at the kind of the at the money extrinsic value in Tasty Trade. You can change these columns, and I have extrinsic value in here. So the at the money is about, between, depending, we're right at 223 right now. So let's go and sell, excuse me, we're going to buy two of these. I start around, 75, 70 delta, two of those calls, and that gives us a extrinsic value right around 330. And so then we're going to go and we're going to wipe out all of that extrinsic value that we're buying by selling one of these, whoops, went the wrong way with it, one of these calls. So you can see we have no extrinsic value or a very low number here. Now, this requires us to pay a larger debit, 1389 in my account. That's going to be your max loss. Notice here, your max profit is unlimited to the upside, and you actually are picking up greater than 100 delta. So this is what makes it the stock replacement strategy. And here is what that looks like. So as again, there is no risk, or excuse me, there is risk to the downside. No risk whatsoever to the upside. You have unlimited profit potential, just like stock. And then to the downside, your loss is capped at 1381, which is quite a bit less than if you were buying 103 shares of IWM. So this orange line you can see is affecting you much less than it is in the other strategies. And that is because we have attempted to get rid of all of that extrinsic value. And again, there is some protection to the downside. If we were to drop down, you would not immediately show the greatest loss that is possible at that level. Which one do you like, Matt?
Well, I think each one of them, as you described them, brings a different strategy. And so depending on probably your level of sophistication, your ability to be at the screen, the way that you like to look at a risk, I would also say the type of where you are in the move is also important. So I like how you described, if you wanted to wait for a small pullback, right? You could look for that. And I found, identified some support probably around that 220. This is a very strong stock. So sometimes they don't give you much opportunity. And that's why the selection of these three, I think, all three of them are great, because you don't have to be perfect with timing. So probably the first two might be the ones I would consider most likely the debit spread, and then if there was a nice pullback, maybe do the stock replacement strategy. And the way that we like to look at it, and I think Slim talks about this a lot, is we don't typically go all in on the first entry, right? So if you have a capital deployment maximum that you allocation that you consider, maybe half of it goes to one strategy, and then the other half could go to another one, and so on and so forth. So I think we covered three very good ones, and IWM is a good case study for this these bullish strategies.
I agree. And one thing I do want to point out is, as we mentioned before, with options, there's always a give and take. So yes, this one does require you to outlay more capital, but I will point out that at each of these target zones, your profit potential is also greater.
Excellent. RV, any comments on the option strategies at all, or?
No, I mean, I think that using like using options for me is something that is new. Like I don't trade much options, right? So
Sure.
I'm just sitting here like listening, just trying to take it all in, because there's a lot of new things that I can learn, So
Sure.
I think there's a lot of there's everyone out there who are also trying to just learn a lot, but
soak it in.
I think that's like I'm just sitting here listening. I'm like, wow, there's a whole world out there that I need to learn about. So
Yeah.
yeah,
I think it's
thank you
important
for this.
for sure,
Yeah,
Katie.
certainly.
Yeah, when the
Katie's awesome.
combination of the team with RV, with your, the more directional sort of clean, because when you trade stocks and ETFs and futures, it's pretty clean, right? It's
very
you
clean.
know,
Yeah.
very clean. You know your entry, you know your exit. You can pick your stops, your targets. There's a whole nother level of thinking and conversion of information and assimilation of information. And I think some challenges that I hear, at least, is people jump in, even if they're newer to trading, with options. And I think that's hard. And if you're going to do it, having someone like Katie is going to be very helpful. And that's why we do these segments. But in terms of pure learning from a methodology standpoint, trading stocks and ETFs, especially with no commissions, it's pretty tough to beat.
Yeah, this
Also,
is, very
I think
capital efficient.
Right.
it is for sure. But I think, always you have to also understand, like, how do you actually, go from, okay, here is what I think is going to happen, to, how do you actually trade that, right? And then how do you go from one end to the other, right? How does that work? So that's what's so important, and something that we all have to just really learn over time, right?
Right. And if you were a beginner with option strategies, you certainly probably would not jump into the zebra. I would recommend a narrow debit spread.
Narrow debits,
Because,
right.
you're risking a couple $100 to make a couple $100. You don't have to do a big $10 wide like I demonstrated. You can just do something small just to get your feet wet.
Right. That's a great way to learn, right? And you're
Totally.
not stressing out and sweating over a few $100, but you're learning, and you're learning a process, which is most important. Like Harvey said, how do you start? And you're starting with analysis. First of all, you have to have a methodology, then that converts to analysis, and then you have your technical evidence that you then have to put into a trade planning framework. And so that's what we wanted to bring to you in this segment and overall today. So we do appreciate your time and your interaction. And I'm just going to share this final slide here. So thanks again for joining us. Reminder that we do have a level 3 special just started today. It's a 1-month trial, 37 or not. It's actually 50% off for $59.50. It's non-recurring, so it truly is a trial. And regular is $119. It's a one-time use. You can go right to the website, top of the page. I'll show that really quick so that you can see it. Top of askslim.com up here. Click on there. That'll take you to the special offer page. Other than that, have a safe and fun holiday extended weekend. And we wish everybody all the best and great trading.
Thanks, everybody.